Hey everybody, today we are going to go over what is a symmetrical triangle. So before I jump into what exactly a symmetrical triangle is, I definitely want to point out that there are pretty much three different types of triangles. You have a descending triangle, which statistically is a bearish setup. And when I mean statistically, I mean that there will never be a setup that occurs 100% of the time towards that bias. For example, the descending triangle is not always going to break down to the downside. There's also an ascending triangle, which is statistically bullish. But once again, that does not mean that you are going to always get an upside move when you have an ascending triangle setup. Now, I will be doing videos on these individually as well, so definitely look for those videos when they come out. But for today, we're going to go over the third type of triangle, which is the symmetrical triangle. And interestingly enough, the symmetrical triangle really has no bias at all. It's an extremely neutral setup, and it's essentially just a parallel triangle. So you have a diagonal support zone and you have a diagonal resistance zone that meet at the apex of the triangle. So this is the apex. And so that is really kind of one of the things to focus on for any triangle. As the closer a price gets to the apex, the more likely chance you're going to have a pretty big move. So in general though, the symmetrical triangle is very neutral. And a lot of people think, any type of triangle is bullish or bearish. The symmetrical triangle really has no edge at all, unless you're trying to trade maybe the support and the resistance zones with some type of invalidation, being a close below the support if you're maybe looking for a bounce, or a close above the resistance zone if you're looking to maybe short the vehicle that you're using. In this case, we're just looking at crude oil. So there are definitely some misconceptions about the symmetrical triangle. A lot of people think, oh, symmetrical triangle, it looks real pretty. It must be a bullish setup. It's very neutral. There really is no edge until you get a breakout above or below the thresholds of that triangle, which in this case is the resistance zone or the support zone. Now, I've already done a video on trend zones. So essentially what I did here was I took the wick here. In this case, we're looking at the crude one-day candle from November 29th, 2023, and I'm connecting it to the wick here from December 25th. You can see here that you do have now a top of the zone, but how do you get the bottom of the zone? The way that I personally draw zones is I'm taking first the wick to the wick, which is the top of the zone in this case for resistance, and then I'm pulling this down to create the width, which is essentially just connecting this body from the December 25th candle. So essentially this wick right here from the December 25th candle is your width of the zone. And you can see here in this particular day, this is January 4th, you can see prices starting to go into this zone. Now, zones are interesting. They're not, first of all, if you're using an exact line, exact moving average, anything like that, you're really just using a precise price. And a lot of the time, that just is not how the market works. You have margin, you have to have a margin of error, you have to have flexibility around areas. You have to have, and for example, notice here, the next candle, we tested the zone, but we not get above it, and we rejected here. So that's why zones are crucial, because if you were just using this line, you would have maybe missed this potential short here. And so the zone really gives you some flexibility. It gives you flexibility on scaling in or scaling out of a position, because you can use, let's say, the bottom or the top of the zone as maybe a partial scale out or a full scale out, depending on what part of the zone that you're looking at. So the zone really helps you kind of create an area of, okay, we're nearing the zone, okay, we're in the middle of the zone, and okay, we're at the top of the zone. We could be breaking out, or we could be breaking down depending on if it's resistance or support. So in this case, you can see here that we are starting to trade in this area, but you could also just continue to trade within this triangle for the next 2 weeks before you get to the apex of this setup. maybe not 2 weeks, maybe about 10 days. But the case is when you're within this area, unless you are just a very short-term trader and you're just trying to capture the moves around resistance and support with some type of stop being maybe a particular candle close above the resistance or below the support, breakout traders are really waiting for an actual breakout, because until you get that, it's a very neutral setup. It can go either way. Now, sometimes it depends if you're in a specific trend. So this will definitely kind of create more of, let's say, a bearish pennant. And now a bearish pennant is essentially just a symmetrical triangle that's forming in a downtrend. A bullish pennant is essentially when you have a symmetrical triangle forming in an uptrend. So in this case, you could see kind of a bearish pennant forming here, but it's only called a bearish pennant because you're in a downtrend. That's where the bearish comes from, that you're in a downtrend, so you're in a bear trend, and that's where the pennant is forming. But for the most part, a symmetrical triangle is really neutral, and any setup is really dependent on the breakout. As I mentioned, you can have a descending triangle that breaks to the upside, and then that would invalidate the bearish thesis on the descending triangle. For the symmetrical triangle, same thing. You're just waiting for a breakout. The thing is, though, it really doesn't hold the same type of bias if you're just looking at the triangle itself versus where it is in the trend as an ascending triangle or a descending triangle would. So here, technically, since you're already in a downtrend, this may present more of a bear bias, because the thought is, okay, we're in a downtrend. If we break below this support zone, then we will continue the trend down. But that's the big if. That's essentially what all of this is. It's systematic. If price breaks and closes above the resistance zone, then this is a symmetrical triangle breakout to the upside, and you likely will have continued moves to the upside. Now, as I've gone over in other videos, if you have a breakout, you generally come back to retest this zone before continuing up. So if you are maybe looking for a way to play this, a lot of the time people wait for the breakout and then they buy on the pullback. There's many different ways to play any type of setup. That's generally how a lot of breakout traders play. They wait for the breakout and then buy the pullback when you test the previous resistance or test support if you broke to the downside. And so that's a way where you can minimize risk. You get a better risk to reward ratio than just buying when the price actually breaks out. So really the triggers for this are simply just a move to the upside and break above the top of the resistance zone. And remember, if you're using diagonal zones, this value is going to change every day, right? If it takes 5 days, then all of a sudden your breakout is going to be down here around 73.50. If we broke out today, your breakout would be around 74.70. So the diagonal part of the trend zone is really important because it's not static like a horizontal level. It's changing daily. So if somebody were to say a symmetrical triangle breakout for oil is 74.70, that is just for this candle. In a week, they would say the breakout is now around 73.60, whatever this day is on the 10th. So it is dependent on the slope of the line. The steeper the slope, the bigger that change is going to be on a candle basis. So each candle that goes by, it's going to be a more drastic change at where the breakout or the breakdown zone is. So all in all, a breakout above the top of the zone, the threshold of the top of the zone, is where you would consider this when bulls are in control and you have a bull thesis. And then when you have a break and a close below the bottom of the support zone is when the bear thesis would kick in. And as I mentioned, same thing. You can have a breakdown, but a lot of traders wait for the initial breakdown, the retest, and then it gives a better risk to reward, because then you could use your stop at the top of this zone versus buying all the way down here and then it pops all the way up. You're having a lot more risk within that stop. So the closer you are to where your invalidation is, the higher the risk to reward is. So really the best way to use these symmetrical triangles is really, if you're very short-term trading and you want to trade within the thresholds of the triangle, that's definitely one way to do it. But if you're looking for more of a higher probability and more of a continuation trade, people are generally waiting for the breakout and close above the candle. And remember, it doesn't matter what candle you're on. In this case, we're on a daily candle, so it'd be a daily close above the threshold, the top of the resistance zone. But if you're on a 5-minute chart, it would be the 5-minute candle breaks and closes above this area. So all of these setups are fractal. They can be used on any time frame. It's not just like a symmetrical triangle works on a daily chart. It works on any time frame chart. And that's the beauty of candlesticks and patterns in general. They aren't really limited to any one time frame. So all in all, the symmetrical triangle is one of 3 symmetrical triangles. One of the biggest misconceptions about symmetrical triangles is a lot of people think they're bullish. They are a very neutral setup with really no edge until you get a breakout above the top of the resistance zone or a breakdown below the bottom of the resistance zone, and generally from there you get continuation up on the breakout and then continuation down on the breakdown. But always remember, whenever you have a breakout, whether it's through a horizontal zone, diagonal zone, VWAP, anything, a lot of the time the default assumption is to at least retest where the price broke out, and then that presents a much better risk to reward for many traders that are looking at this setup to potentially make their own trade. If you do like these educational videos, we have a ton of educational videos. There's a lot of videos that I'll be doing on candlestick patterns. We have a ton of videos already on anchored VWAP, SR flips, what's a falling wedge. I'll be doing videos on what's a descending triangle and how to draw a descending triangle, and in the triggers there, ascending triangle. So definitely like and subscribe if you do enjoy these videos. There will be many more coming in 2024. And if you have any questions, definitely comment in the comments section below. And remember, we are using the Optimus Flow platform to create these charts. This is a technical analysis platform that is part of the Optimus Futures brokerage. So if you are a futures trader and want to check out Optimus Futures, you can definitely check out the website and the overall brokerage with the link in the video description. And as I mentioned, any questions that you have, you can just comment in the video comment section and they will be answered by one of the team members. Thanks so much for watching, and definitely wait and check out the next video coming out, which will likely be on the hammer candlestick.